In this video, we're going to be exploring where do SIPP millionaires invest their money in 2024. Let's explore exactly what these millionaires are doing, what's in their portfolios, and what they are investing in. So you're probably wondering, what on earth is a SIPP? This stands for Self-Invested Personal Pension, and we're seeing SIPP investors increase their accounts year on year, meaning more people are self-investing. This is an interesting curve to throw out there, and it shows you what people are up to. So SIPP millionaires, they have a well-diversified portfolio across various countries. Most of the exposure is among global markets, the US and UK, with predominantly UK SIPP holders holding more UK shares. Another interesting aspect about UK SIPP holders is that they are investing into gilts. Gilts is also known as government debt, and at the moment you can yield roughly 5.22% on 1 month fixed. So that's 5.22% over a 12-month period, but your money is locked up for 1 month and then you can get that money back. You can use apps like Free Trade to invest into gilts. This is what we call low risk investment, and it's a good way to get solid returns. You're only going to lose money if the government were to default on the debt, which is very, very unlikely. A lot of popular investments at this moment in time are in stocks like Nvidia, Apple and Microsoft. They're also looking at different funds as well, such as Artemis Income and Fundsmith Equity. Now, one thing all of these SIPP investors have in common is long-term planning. So let's explore this a little bit more to dive into what does a SIPP millionaire look like. Now, to some shock, some of you may be upset by this facts and figures, but social media is putting a dent into realization of what does a SIPP millionaire look like. Well, I'm going to debunk this. The average SIPP millionaire is 63. So this is all come down to long-term growth, long-term planning, and investing and utilizing compound. They are not looking for quick gains, and they're investing into the long-term growth of the markets. And having this diversification between looking globally, UK, USA, and also different investment areas such as gilts helps to steady the ship during turbulent times within the markets. So I thought I'd put together 5 tips for an aspiring SIPP millionaire and putting into place some steps that you can start getting onto this journey early and take full advantage of that compound. Step 1 is start early. The earlier you start, the more that you take advantage of that compound effect. This is true, and overall compounding into those market gains is going to speed up this entire process. So let's try and take that 63 average age down lower through educating my subscribers. Number 2, maximize your employer contribution. The more that you contribute, the more your employer will contribute as well, and the quicker you're going to get to millionaire status through SIPP investing. Number 3, increase your contributions regularly. The more that you increase your contributions regularly means the more that you're going to put into the pot, which is overall going to compound and work in the background whilst you're working in your job. Overall, looking after yourself in the long term and building that pot, utilizing compound, increasing those contributions, and overall increasing your employer allocation as well that they're putting towards your pension. Number 4, invest for the long term. Change your approach from short-term success into focusing onto that long term. The more that you look at the bigger picture, the less stress you're going to be on a day-to-day basis. Allows you to focus on increasing those contributions, increasing that compound effect, and looking at the long-term horizon rather than how you're doing on a month-to-month basis. Focus on a year-to-year basis, knowing that you're accumulating wealth and you're growing that pot for the long term. This will overall reduce your stress levels and overall ensure that you're well looked after in the future. And number 5, invest in your education. The more that you're learning about the markets, the more that you're learning about economics, the more that you're learning about geopolitical tensions and how it can affect your portfolio, will also help you manage your SIPP. The more that you understand what is going on, the more that you can benefit from that, and the more that you can see opportunities. Just like what I was talking about in my previous video when we was talking about orange juice futures, you can see how orange juice has gone from like $1 all the way over $5 due to volatility, but also due to dry periods, droughts, and also floods are really affecting the crops. So you can work out where you want to put your money for the long term and what you see as those issues arising will give you a better picture to understand how to invest. Therefore, increasing your education is super important, and that is why in this description you will see my masterclass understanding how to invest and how to even go and buy a gilt, for example, how to look after yourself in the future. All of these things help you on your journey. And also, if you're looking to increase your knowledge and education, not only do we have our investment course, but we also have our Ofqual regulated level 5 and level 7 diploma within financial trading. So if you want to really broaden your knowledge base and gain a government regulated qualification, then you can see the link in the description to find out more information. Guys, I really hope you've enjoyed this video. Start educating yourself. Start with these basic tips and tricks on exactly how you can start building your pot at an early stage in your life and really take advantage of that compound effect. Make sure we hit that like and subscribe button, and let me know when you think you're going to be a SIPP millionaire in the comments.